Hello everyone and welcome back to my daily report market videos with me, Richard Perry, market analyst at Hantec on Monday 3rd of June. Let's look at cable, which has rallied to an extent in the last session or so. Friday's candle you could argue was a bull hammer candle, which is a one-day turnaround, hitting a new low of 25.57 before rallying into the close. About 70 pips, 80 pips. And then continuing a little bit higher today. And you've seen a little bit of a turnaround, not a significant amount on the momentum indicators. You could argue there's a little bit of a positive divergence going on here, but you'd want to see the RSI probably in the mid to high 30s really to suggest something of a recovery is going on. You'd also want to see this downtrend broken. That downtrend comes in, that's a 4-week downtrend coming in at 26.80 today. You've got 27 figure as an old pivot line, but to be honest, the main resistance obviously is that last week's reaction high, 27.55. So there is an overhead supply, basically 27 figure area to 27.55 that you really do need to see the market through in order to properly engage into a recovery situation. And until you really see that, I don't think you can suggest that cable is anything more than a sell-in strength, because the fact that sterling has been under so much pressure and is not really showing an enormous appetite for rebound either yet, I think that little recoveries are going to be still seen as an opportunity rather than the beginnings of a recovery. So I think that's where we're at on that. Now you look at the hourly chart. Still fairly, I suppose you could say neutrally configured on the hourly, but to be honest, the fact that you're still trading broadly underneath that 144-hour moving average, you haven't really made any decisive move through any resistance. I mean, you could argue that 26.40 was a basis of resistance, being a minor old pivot, but to be honest, you've not really seen any decisive recovery on the technicals on the hourly chart yet. And slight improvement, yes, on the hourly RSI, but MACD lines are already starting to roll over as well. So if the RSI starts to sort of drop back under 50, maybe even below 40, if you lose that support at 20, let me just get across there, zoom in, that 26.11, 26.10 mark. I think if you start to move below that, then I think you'd be suggesting that the recovery is likely to have been played out and renewed move to the downside kicking in. So I wish you good luck in your trading. I'll speak to you later.